Well, mortgage rates ticked lower for the first time in 6 weeks in the latest data from Freddie Mac, back under 7%, but still well above the average compared to this time last year. Meanwhile, monthly housing payments are the highest that they've been in 7 months, according to Redfin, at over $2,600 a month. This data showing affordability concerns remain in 2025. Joining us now, we've got Greg Schwartz. He is the CEO of Tomo, a mortgage company that aims to streamline the home buying process. Greg, good to have you here on the program with us. What is your outlook for the housing market given this recent data?
Yeah, great to be with you, Brad. Hey, there's still a huge amount of interest in housing. We see no slowdown in folks wanting to become first-time home buyers and really get on the wealth building ladder. What we don't expect is a lot of progress on mortgage rates, certainly for the first quarter, first half of the year. So we see a lot of folks sitting on the sidelines trying to pick the perfect moment to enter the market. I don't think a perfect moment is going to present itself anytime soon.
So you actually lay out some potential solutions for the housing market. Break them down for us.
Yeah, Brad, we had a lot of fun last night. We did the squad and I did a full brainstorm for your show to say, if we were buying right now, what would an insider, a squad of insiders do? So a few very fast tips. First, the CFPB mandates we do something called a loan estimate as a mortgage lender, and it is a uniform way for customers to shop rate and hidden fees. That's where we see many customers get nicked on affordability, is they don't get a comparable rate. They see a marketing rate online. So that would be number one. Get a CFPB loan estimate. It's what it says on the top of it. Number two, play the address game, as we call it. There are a lot of incentives for lenders like ourselves, banks, to lend to folks that have up to an 80% of the average median income, the AMI. Sometimes we can earn thousands of dollars more as a lender when someone's below that 80% AMI threshold. Some lenders pocket those thousands of dollars. Tomo, in our case, pass it back in the form of lower rates. There's a tool that is a wonderful tool on Fannie Mae's website called the AMI tool, where you could check your area median income versus your average. That could save you thousands of dollars.
What?
Hey, yeah, go ahead.
Yeah, no. Please continue, and then I'll jump in.
Yeah, we've got two more quick ones. DTI and credit thresholds. Hey, we always recommend you work with a loan officer who's experienced and savvy and understands sometimes a little threshold, a 5 or 10 point improvement in your credit score can actually put you in a different risk bucket. And you'll see a rate that could save you hundreds of dollars. You want to work with a loan officer or online tools that are very savvy about, hey, maybe a few $100 payoff on a credit card line will save you thousands of dollars over a year.
What type
Those
of...
would be the big three.
Certainly. And so what type of changes are you anticipating to come from the current administration to fix some of these issues, inventory and high rates?
Yeah, hey, there's some things in control politically, and there are some things that we just can't touch. The key driving factor are two in housing affordability. It's the mortgage rate, which is going to be driven by inflation, and I know you've talked a lot about that on the show, and we know how linked that is to employment and some of the political decisions being made in DC. So it's really affordability is about rate and it's about insurance. We haven't talked about this together, but household insurance numbers are just up through the roof. Nationally, we're seeing in our customer book a minimum of a 15% increase. If you're not a climate impacted area, we're seeing 50 and 60% home insurance rate increases in climate impacted area if folks can get insurance. That's my primary worry right now about affordability is insurance, particularly climate impacted insurance. And then, hey, what you asked, what can the administration do? They got to keep a wary eye on inflation. They got to take a hard look on home insurance policies with what they can impact federally, I guess. And then we got to build, baby. We got to build. There's no way out of this situation. There are more people that want to start building wealth by getting in a home than there is supply.
And so with that in mind, it seems like on the labor force participation side, it would also behoove us to still have the same amount of inputs in terms of employees helping to build out more homes as well. And if we're in order to see the necessary kind of gap be rectified for building out homes, what type of rate do we even need to be producing homes at in order to meet the demand and also bring down prices at the same time?
Yeah, hey, we think we're 7, 8 million homes underbuilt in the United States today. We tend to produce, depending on the year and what's going on, between 500 and a million new homes a year. So we've got years and years and years of backlog, and that's without climate disruption like we saw in California. So we need significant creative action to make any real progress on inventory numbers.
Yeah, certainly. Greg, we're going to be tracking this. We know you will be too. Greg Schwartz, thanks so much for taking the time.
Yeah, thanks for having me.
Certainly.